If there is one group of investors that seldom generates profits in the market and most often loses, it would be short-term investors. The term short-term investor also refers to the class of retail investors who want to make millions of dollars in a mere matter of months. This group of investors lacks patience, discipline, and the ability to hold a long-term approach to the markets. Short-term investors reveal their inexperience by believing that they can time the market and come out on top. They do not realize they are up against professionals who have been trading and investing their entire lives. Large institutions depend on short-term investors to provide essential liquidity to their trades and feast upon the greed of short-term investors. Marketing budgets of brokers and exchanges are often spent on finding new retail investors to replace the short-term investors who have already been wiped out. To win, you must have a long-term approach to investing. You must avoid the mistakes that short-term investors naively make that prevent them from being profitable. The first reason why short-term investors fail to make a profit is because they try to time the markets. It is important to stay invested in the markets over a long duration of time instead of trying to time and extract value from markets. The market rewards long-term holders while punishing short-term traders. Because short-term traders are not willing to commit long periods of time to building their portfolios and are only interested in getting rich quickly, they often have to depend on leverage trading to achieve their objectives. This type of investor usually does not have a lot of money to invest into spot positions and are not willing to put the time in to see their spot holdings appreciate. Thus, they are the type of investors that are most likely to leverage up in order to make large gains rapidly. This method hardly goes according to their plan. The majority of leverage traders fail because they are playing a game with the odds stacked against them. Any temporary wins are offset by future losses. To build an investment portfolio on a strong foundation, it is imperative to have a long-term approach in order to avoid falling victim to short-term losses. Short-term investors try to ride the hype train to success. They invest when everyone is talking about something and avoid investing when no one is interested. It is in this way that they fail to capitalize on life-changing opportunities and get destroyed when the hype begins to fade away. Long-term investors are less likely to FOMO in when the masses of people are entering a market. They are also likely to still be invested in the markets when great opportunities come their way. By holding a long-term approach, they are able to dramatically outperform short-term investors who continuously enter markets and leave just as fast as they come in. Long-term investors often see many groups of short-term investors enter and leave markets. Greed leads to over-leveraging, which causes markets to rise in valuation until they become overvalued. The market often washes out short-term investors in an almost systematic fashion. The process is quite simple. Groups of naive and ambitious retail investors enter a market in the hopes of generating quick wealth. They borrow money from exchanges to leverage trade, often following the advice of influencers. They may get a taste of the money they were seeking after, which only causes them to become even more zealous and bullish. The upward momentum can only continue on for so long before prices inevitably return to reality. While a long-term investor may view such moments as incredible opportunities, short-term investors see it as uncertainty. The reason why prices become so low during bear markets is because short-term investors can no longer make a quick buck. Smart money accumulates while the retail crowd is no longer interested in purchasing. The reason why prices are high during bull markets is because short-term investors are pouring liquidity into the market to make a quick buck. As you can see, the best way to win is to build cash and spot positions and be ready no matter which way the market moves. You can use the liquidity of short-term investors to take your investments to the next level. If you found this video educational and want to see more, make sure to hit the like button and subscribe to my channel. I'll see you in the next one. This video is strictly for educational purposes only and does not constitute financial advice.